Hello, my name is Sunshine. Today's topic is buying before going up. In the stock market, I believe most people try to buy the stock before it goes up, but only find it plummets afterwards. If you buy, you get a stock, and when you sell, the stock goes up. Do you feel angry? Now let's look at the chart. Here, look at this. After the stock price plummeted, it was supported at the 100-day moving average. On this day, the stock price gapped and opened higher. Why did it drop the gap first? Stimulated by strong bullish or bad news, the stock price began to fluctuate sharply. A gap usually occurs before the beginning or end of a major stock price movement. A gap up indicates a strong gain, and a gap down indicates a shocking decline. Why would there be a gap, and how does the gap form? With strong positive and negative news, stock prices began to drop sharply. The gapping usually occurs at the beginning or end of a big move in stock prices. A gap up indicates a strong rally, while a gap down indicates a dramatic fall. Gap refers to a certain period of time not occurring in a trading area. The gap is generally divided into common gap, breakaway gap, continuation gap, runaway gap, exhaustion gap, and opening gap. Let's look at the chart again. This is an upward gap indicating a strong uptrend, and the stock price is supported in this place, so we should go long in the later stage. But let's see how it goes afterwards. For all to see, it fell. So how to make sure the price will rise as soon as we buy it? Today, I'll introduce you a model, the island reversal bottom. This depiction shows an island reversal bottom forming by several candlesticks. The first one is a medium red line. The second candlestick is a small red line that gaps down and finishes lower. Candlesticks in between are some small red and green lines. The last one is a medium green line that gaps up and finishes higher. This pattern appears at the end of the downtrend, which is the signal of a general warming. The market outlook is bullish, and investors should choose the opportunity to get in. At the end of the stock price decline, a downward exhaustion gap first appears, which is generally caused by panic selling caused by bad news. Since almost everything that should be sold has been sold, people still with positions begin to sell with reluctance. The short selling power gets exhausted. The stock price stops falling, then gradually stabilizes, and there are signs of rising. Soon the stock price gaps and sees the exhaustion gap driven by buying. In the same price range as the exhaustion gap leaves an upward breakthrough gap. Thus comes the island reversal bottom. Let's look at the next chart. After a period of continuous decline, the stock price suddenly gapped and opened lower, leaving a downward adjustment gap. In the following few days, the stock price went through a hovering stage and suddenly peaked, and the stock price gapped up and began to rise rapidly. This gap up was the same as the gap of previous declines, basically located near the horizontal position of the same price range, making the low-level contention area look like an isolated island away from the coast on the keyline chart. The islands on the left and right sides stand alone on the ocean. A stock price rose all the way in the later period from $30 to $42, and the income was very good. This is island reversal formation at the bottom. It should be noted that the trading volume of the island-shaped part is generally smaller than that of the decline before the gap, showing a unique characteristic of shrinking volume. And when the stock price breaks away from the island-shaped sideways, the trading volume has expanded significantly. This stock is in a long-term downward trend and has accelerated its downward trend recently. The stock price gapped down and closed with a medium red line. Since then, The stock price has fluctuated and goes sideways at a low level. A week later, the stock price gapped up from the previous gap down price and ended higher. Stay away from the previous sideways drift area. At this point, the island reversal bottom is formed, indicating that the stock price will continue to rise in the market outlook. After the stock price has stepped back in the later period, it will show a strong upward trend. I bought the stock at $170 and it went up to $230 in the later period. However, in most cases, after an island reversal at the bottom, the stock price will always fluctuate drastically, but the stock price will abruptly stop when it reaches the rising gap price and then begin to go upward again. Aggressive investors can buy when the upward breakaway gap is generated and the trading volume is significantly enlarged, while the steady investors can buy after the stock price rushes back to the upward gap to obtain support. If the stock price does not step back, you can buy at a higher price. Finally, the method is over here. Have you learned it? After learning this method, you can easily make a profit when you buy and obtain large amount of profits. Then how can this type of stock be selected? I selected a stock that has this trend line recently, and I'll show you the trend line of the stock I've selected for free. Let's see. We can see that this stock has formed an island reversal formation while forming a low W, and the stock price has recently stepped back on the rising gap. If it breaks through the 120-day moving average, its first target position is the gap above. We will wait and see. I have already long this stock. Anyone who needs this stock can add my WhatsApp and ask for it. Anyone who likes this video, do like and follow me. See you in the next video.